Hi, good afternoon. So this is Ma'am Pat. So we will be discussing some more exercises relating to property, plant, and equipment. So to continue with our previous discussion. So previously, we discussed about the depreciation methods, the changes in estimated useful life of the asset, as well as changes in residual value and change in depreciation method. So let us continue now. We will be answering (2-27) now. Okay, so the exercises that we are discussing again are taken from Intermediate Accounting Volume 2. Okay, so we start with 2-27. At the beginning of 2018, Immaculada Company purchased a machine costing 1 million. The machine is expected to be useful for a total of 10 years, at the end of which it is expected to be scrapped, so there is no residual value. On July 1, 2023, the company replaced the engine block of the machine at a cost of 320,000. This replacement is expected to reduce the operating cost of the machine during its extended useful life of 10 years from the date of replacement. We are required to give the entries to record the replacement and the year-end depreciation, assuming letter A assumption, the old part had a cost of 250,000, and letter B, the cost of the old part is not reliably determinable, and that the new engine block was very much identical to the replaced part. So we go back therefore to the principles of subsequent accounting treatment for subsequent expenditures. So as we have discussed previously, subsequent expenditures are generally expensed unless these subsequent expenditures provide economic benefits in excess of originally assessed standard of performance. So what are given here are that the replacement is expected to reduce the operating cost of the machine and that the replacement extends the useful life of the machine to 10 years from the date of replacement. So there are two economic benefits derived from this subsequent expenditure: reduction in operating costs, and second, extension of useful life. And therefore, we are to capitalize. Our accounting procedure, therefore, is that we will recognize the old part because the old part will be retired, and then we will recognize the new part. So to recognize the old part was simply removed without any proceeds from such removal. Therefore, we compute for the accumulated depreciation of the old part. The old part in letter A had a cost of 250,000, and originally it was estimated to have a total life of 10 years. And it was replaced July 1, 2023. So that means therefore that the asset, the part, was depreciated already 4 years, 2018, 2019, 2020, 2021, 2022, and half of 2023. Therefore, it's for a total of 5.5 years. So the annual depreciation on the old part is 250,000 divided by 10, that's 25,000, times a number of years from the date of acquisition to the date of replacement. So you are to assume that depreciation has been updated up to July 1, 2023. So that's a total of 137,500. So to recognize the old machine part, our entry is to credit machinery for 250,000, transfer the accumulated depreciation, so recognize also the accumulated depreciation of 137,500 as computed here, And then the carrying value of the old part is transferred to a loss account because there is no proceed from the retirement of the old part. So debit loss on disposal of machine parts for 112,500. So after the recognizing the old part, now recognize the cost of the new part. And the new part costs 320,000. So our entry for that, debit machinery 320,000, credit cash for 320,000. Okay, so the recognizing the old part and capitalizing the new part will mean that the carrying value of the asset has been adjusted, so we will need to compute for the depreciation expense. So we have two components of depreciation expense for the year 2023. That is, we are depreciating for half year the old part, and we are depreciating for the last 6 months the new part. So let us compute. So from July 1 to January 1, 2023, this is 2023, prior to the replacement. We have 1 million divided by 10 times 6/12. That's 50,000. This is the depreciation for the entire machine for the first half of the year. That is for the year 2023. So we are depreciating the machine for half year, including the old part, 1 million. And then determine the carrying value of the machine after capitalizing the new part and recognizing the old part. So the carrying value of the machine on July 1, 2023 after capitalizing the new part is 1 million divided by 10 times the remaining number of years from the date of replacement to the end of the original estimated life, which is 450,000. You may also compute that by deducting the accumulated depreciation for 5.5 years from the total cost of the asset of 1 million. Then out of the total carrying value as of July 1, 2023, before the recognizing the carrying value of the old part and capitalizing the new part, we recognize the carrying value of the old part, which is the amount that is taken to loss. So that is 112,500. Then we capitalize the new part amounting to 320,000. So your revised depreciable carrying value is 657,500 divided by the remaining useful life as revised from the date of replacement. So that is 10 years. We go back now to 10 years. So your revised annual depreciation is 65,750. But this 65,750 is annual. The replacement took place only on July 1. So take the proportion of the year. So that is half, or 6/12. So from July 1 to December 31, 2023, the depreciation on the asset is 32,875. Again, from January 1, 2023 to July 1, 2023, the depreciation is still based on the cost of the old machine, based on the previous revised life, 50,000. But from July 1 to December 31, 2023, the basis for the depreciation is the revised carrying value after the recognizing the old part and capitalizing the cost of the new part, and taking into consideration the revised life after the replacement. Then take 6/12. So that is 32,875. So your total depreciation expense for 2023 is 82,875. Okay, so our alternative computation may be presented as follows. We have the depreciation on the new engine block, that is from July 1 to December 31, that's 320,000 divided by revised life of 10 times 6 over 12, so that's 16,000. And for the old part, that is replaced engine block, that is 250,000 divided by 10 times 6 over 12, that's 12,500. On the remaining parts of the machinery for the first half, that is from January 1 to July 1, that is 1 million minus 250,000 because we are depreciating the remaining parts of the machine. So that's 750,000, but 750,000 is to be depreciated over 10 years times the first half of the year, so times 6 over 12, that's 37,500. And then on the carrying amount of the machine after the replacement, so that is 750,000 divided by 10 times the remaining number of years, which is 4.5, so that's 337,500 divided by the revised life now of 10 years times 6 over 12, so 16,875. So your total depreciation expense for 2023 is 82,875, which is the same as we have computed here. So whatever suits you, you have to resort to that computation. So you have the option of computing it this way or computing it by parts. Now, if the cost of the old part is not reliably determinable, and that is most likely because when we purchase the asset, we do not know exactly the cost of each component of the asset. So, what does IAS 16 state? IAS 16 state that if the cost of the old part is not reliably determinable, you are to assume that the cost of the new part is the cost of the old part after making adjustments for difference in quality or nature. However, it was stated here, we go back, that the cost of the old part is not reliably determinable, hence we will be using that assumption, and that the new engine block was very identical to the replaced part. Therefore, we will not make any adjustment on that assumed cost of the old part. So the assumed cost of the old part is 320,000 because that is the cost of the new part. So based on that, again, we will be recognizing the old part. We credit therefore machinery for the cost of the new part, 320,000. Debit accumulated depreciation, that is 320,000 divided by 10. So the annual depreciation on the part is 32,000 times number of years that lapse from the date of acquisition to the date of replacement. So that's 176,000. So the carrying value of the asset is transferred to a loss, 144,000. And then capitalize the cost of the new part. We debit machinery for 320,000, credit cash for 320,000. Then compute again for the revised annual depreciation. So we'll do it again from January 1 to July 1. So from January 1 to July 1, 2023, your cost is still 1 million divided by 10 years times 6 over 12. So that is also 50,000. So the carrying value as of July 1 is 1 million times 4.5 years, the remaining number of years from the date of replacement to the end of the original estimated useful life over 10, which is the original estimated life. So that is 1 million divided by 10 times remaining 4.5 years. The undepreciated portion is 450,000. Then we recognize the carrying value of the old engine block, which in this case is 144,000. Then we capitalize the cost of the new engine block, 320,000. So the depreciable carrying value after the replacement, that is on July 1, 2023, is 626,000. So after the replacement, your remaining revised life has been extended again to 10 years. Therefore, your revised annual depreciation is 62,600 times number of months again from July 1 to December 31. That's 6/12 or 1/2 of a year. So that's 31,300. So your total depreciation expense for 2023 is 81,300. Okay, you have two ways of doing this. So you may update the depreciation on July 1, 2023 and take up depreciation expense of 50,000. Then you record additional depreciation of 31,300 by December 31. Or because you are not presenting the financial statements as of July 1, 2023, you may defer the recognition of the total depreciation expense for this equipment for a total of 81,300 all at December 31, 2023. So accounting is an art, so it really depends on you. Okay. Again, our principle for the replacement that is to be capitalized, again, you are to capitalize the replacement provided that such subsequent expenditure will provide economic benefit in excess of originally assessed standard of performance. So we go back to this principle. Okay, so your accounting procedure is that you are to recognize the old part and recognize the new part. However, if the replacement is one that is anticipated and that is considered to be a maintenance activity, then the replacement will have to be debited just to repairs and maintenance expense. Okay, we proceed to 2-28 now. This is Remedios Company, and let us read the problem. On January 1, 2016, the Remedios Company leased a portion of the building owned by Royal Commercial Company. The lease expires on December 31, 2025. Extensive work was done on the leased property for the construction of the staff working area. The improvements, costing 1,200,000, were completed on March 31, 2016. The estimated useful life of the improvement was 12 years. During 2020, because of favorable business operations in the area, Remedios Company negotiated for the extension of the lease term by an additional 5 years. Remedios Company provides for full-year depreciation during the year of acquisition and no depreciation in the year of disposal. So we are to compute the carrying value of the leasehold improvements on December 31, 2019. That is 3 years, 16, 17, 18, 19. That is 4 years from 2016, from beginning of 2016. And compute the depreciation expense on the leasehold improvements for the year ended December 31, 2020, because for the year ended 2020, there is an extension of the lease term for 5 years. Okay, so this is leasehold improvement is a structure that is erected on a leased property. So it is expected that at the end of the lease term, whatever is left on the leasehold improvement will go not to the benefit of the lessee, but it will be for the benefit of the lessor. So from the point of view of the lessee, your economic benefit is limited by the lease term. But you also have to consider the useful life of the improvement. So your economic benefit actually is the shorter between the lease term and the useful life of the completed structure. Again, this is your principle. Leasehold improvements are depreciated over their estimated period of benefits, that is, the shorter between the useful life of the improvement or the remaining lease term when the improvement was completed. So we compute for the remaining lease term. Again, it is stated here that the depreciation policy of the company is that they provide full year depreciation during the year of acquisition. So that means, therefore, we are to take 2016 as one full year. And then, the original lease expires at the end of 2025. So from the beginning of 2016 to the end of 2025, the lease term is 10 years. The useful life of the leasehold improvements is 12 years. Therefore, between the two, the shorter period, of course, is 10 years. So we will be using 10 years to depreciate the leasehold improvement. So to compute for the carrying value on December 31, 2019, that is, the cost of the leasehold improvements is 1,200,000 less accumulated depreciation as of December 31, 2019. That is 1,200,000 divided by 10 times 4 years from 2016, 17, 18, 19. So that's 480,000. So the carrying value is 720,000. So during the subsequent year, 2020, so that is the answer to letter A. Letter B, compute the depreciation expense on the leasehold improvements for the year ended December 31, 2020. And during 2020, Remedios Company negotiated for the extension of the lease term by an additional 5 years. So we need to assess what is shorter between the remaining useful life. So the extension of the lease term will not change the remaining useful life of the asset. What will change is the remaining lease term. Okay, so we compare. So your remaining lease term is 10 minus 4 prior years plus extension of 5. So therefore, that is 11. Whereas the remaining useful life of the asset is 12 minus 4. Therefore, the shorter period now is 8 years. So the remaining carrying value of the leasehold improvement will now be depreciated over the shorter period of 8 years. So 720,000, which is the carrying value at January 1, 2020, will now be depreciated over 8 years. Therefore, your depreciation expense for 2020 and onwards is 90,000. Okay, go back to the principle. Leasehold improvements are depreciated over their estimated period of benefits, that is the shorter between the useful life of the improvement or the remaining lease term. If during the period of the lease term there is a negotiation for the renewal of the lease term, then during that year you have to reassess the remaining useful life and the remaining extended lease term. So you take again the shorter period. Then 2-29. So 2-29, we will now start discussing impairment loss on the asset. So what is our principle? So recognizing impairment of asset value is based on the principle that no asset shall be presented in the statement of financial position beyond its recoverable amount. Okay, so this is also the reason why you are recognizing impairment loss on financial assets, example, bad debts on receivable, and this is also the principle why you are recognizing decline in net realizable value of inventories. Again, at the beginning of 2016, so this is now our problem. This is 2-29. At the beginning of 2016, Joy's company acquired an equipment costing $860,000. The equipment was believed to have an estimated useful life of 9 years and a residual value of $50,000. The company uses straight-line depreciation for this type of equipment. At December 31, 2019, because circumstances indicate that the economic performance of the asset is less than expected, the equipment was tested for impairment. The asset selling price on this date was estimated to be $450,000 after incurring $30,000 costs to sell. The asset is expected to provide annual net cash inflow of $100,000 during the remaining 5-year useful life, at the end of which residual value is expected to be only $20,000. Based on current market assessment and risk specific to the asset, a discount rate of 10% is considered appropriate. So, what is the asset's recoverable amount of December 31, 2019? So, in determining whether the asset is impaired, you have to look for the indicators of impairment, which are all enumerated in your book. So, the indicators of impairment are actually given based on the principles identified in IAS 36, Impairment of Assets. Please refer to page 118 to 119 of your textbook to read and identify the indicators of impairment. So there are external sources of information and internal sources of information. Okay, so what is the assets recoverable amount at December 31, 2019? So the recoverable amount is the higher between these two values. That is fair value less cost to sell for the asset and then value in use. Oh, why do we have to choose the higher between the two? That is just based on simple reasoning that if it is more beneficial for the company to sell the asset rather than to use the asset, so the benefit from selling is higher than the benefit from using, then the company might just as well sell the asset. Whereas if the benefit from using the asset is higher than the benefit from selling, then of course, logically, the entity will choose to use the asset. Okay, so fair value less cost to sell is just as is. That is almost identical to net realizable value, that is estimated sales price minus cost to sell. Whereas value in use is the discounted cash flow from the use of the asset. So this is the revenue from the products that may be produced by the asset minus the operating cost to produce that revenue. Value in use is a discounted cash flow, so we are to make use an interest rate. And an interest rate is a discount rate that is based on risk specific to that particular asset only. So it is not based on average interest rate in the market, but this is based on the risk specific to the asset. And what is given here is that 10% discount rate is appropriate. Therefore, we compute for the recoverable amount. Again, that is the higher between the two values, fair value less cost to sell, and selling price If we would sell the asset, will be for 50,000, but that is after incurring costs of 30,000. Therefore, your fair value less cost to sell is for 20,000. Whereas the value in use will be the expected cash flow from the revenue minus the cash outflow from the cost to be incurred. So what is given here? So the asset is to provide expected net cash inflow. So net cash inflow na yung binigay dito. Sometimes you have to compute for the net cash inflow. So net cash inflow is revenue minus expenses in using the asset during the remaining 5-year useful life. And after using the asset for 5 years, the asset may still be sold for 20,000. So your value in use is the present value of 100,000 discounted using present value of ordinary annuity for 5 periods at 10% plus the present value of the residual value. And because the residual value is expected to be received only once, then you are to use the simple present value factor. So that is 100,000 times 3.7908. So we have 379,080. This is the present value of the annual cash inflow. Whereas the present value of the residual value is 12,418. Hence, the value in use is 391,498. Because this one is higher, then we will take this as our recoverable amount. So the carrying value of the asset on December 31, 2019 is computed as follows. We have cost of 860,000 minus accumulated depreciation. So the asset has an estimated residual value originally of 50,000. So 860,000 minus 50,000 divided by 9 times 4 years. That is from beginning of 2016 to end of 2019. So accumulated depreciation is 360,000, so that the carrying value of the asset is 500,000. But as we computed, your recoverable amount, which is the higher between value in use and fair value less cost to sell, is for 20,000. So we will be recognizing impairment loss of 80,000. So our entry is to debit impairment loss 80,000 and credit accumulated impairment 80,000. Then recording additional accumulated depreciation equal to impairment loss will decrease the carrying amount of the asset. It will adjust the carrying amount of the asset to its recoverable amount only of 420. So, should the company decide to continue using the asset for the year 2020, then its depreciation will be adjusted accordingly. That is 420,000 minus 20,000 divided by 5. So, that is 80,000. So, please take note that after recording the impairment loss, your depreciation expense will be reduced. That is so because, in effect, the impairment loss accelerates your depreciation because the same is credited to accumulated depreciation. So instead of recognizing depreciation expense, so magkano yung previous? Let us compare. Your previous annual depreciation is in effect 810,000 divided by 9, which is 90,000. Whereas revised annual depreciation after impairment as computed above is 80,000. So by recording impairment, your depreciation expense has been reduced by 10,000 because we have accelerated, in effect, the depreciation due to recognition of the impairment, decreasing therefore the carrying value of the asset. If you are to ask how much is the annual recovery of the impairment, that's the difference between the previous annual depreciation before recording impairment and the revised annual depreciation after impairment. So from the date impairment is recorded until you test again the asset for its recovery, you are to determine the unrecovered impairment loss. So gradually here you are recovering 10,000 of impairment loss through lower depreciation. So we will be discussing that in a later exercise. Okay, so proceed to 2-30 to strengthen your knowledge on impairment of assets. So 2-30, presented below is information related to equipment owned by Island Souvenirs Incorporated. Cost is 9 million. Accumulated depreciation is 1,500,000. The fair value less cost to sell for the asset is 3,220,000. Island Souvenirs will continue to use the asset for its remaining 5-year life, at the end of which it is expected to be sold at 500,000. Expected cash inflows from the use of the asset is 1,500,000 after incurring production costs, including annual maintenance of 700,000. So that's your total production cost plus annual maintenance, 700. The appropriate discount rate is 10%. So first question, what is the equipment's value in use? So we are preparing for the computation of the recoverable amount of the asset and how much impairment loss, if any, shall be recognized on this asset. And what is the revised annual depreciation after recording impairment? So let us compute first for value in use. So your cash inflow from the use of the asset is 1,500,000, but this is reduced annually by 700,000. So your net cash inflow is in effect only 800,000 times the present value of ordinary annuity for 5 years at 10%. So that is 3.7908. So the present value of annual cash inflow is 3,032,640. At the end of the 5-year period, it is expected to be sold for 500,000. So the present value of the residual value is computed using only the simple present value factor because the residual value is to be realized only once at the end of the useful life of the asset. So it's 310,450. So your total value in use is 3,343,090. Okay, so does it mean that that is the recoverable amount of the asset? Not yet, because again, the recoverable amount is the higher between the fair value less cost to sell and the value in use. So we have to compute first, and that is given. Fair value less cost to sell is 3,200,000. Value in use is 3,343,090. So this one is higher than 3,200,000. So yes, we will be using the value in use as our recoverable amount because the value in use as we computed is higher than the fair value less cost to sell. Okay, so the carrying value of the asset is 9 million minus accumulated depreciation of 1,500,000. So that is 7,500,000. minus the recoverable amount of 3,343,090, which is again the higher between value in use and fair value less cost to sell. Therefore, we will be recognizing impairment loss of 4,156,910. And the remaining life of the asset is still 5 years from the date it was tested for impairment. Therefore, your revised annual depreciation, because after recording the impairment loss, the asset's carrying value will be adjusted to recoverable amount. Lagi yan na. So again, yes. Again, your principle is that after impairment loss recognition, the carrying value of the asset is its recoverable amount. Therefore, it is the recoverable amount minus any residual that will be subjected to depreciation. Okay, therefore, recoverable amount of 3,343,090 minus 500,000 divided by 5, that's 568,618. Okay, proceed to 2-31. So, in January 2017, Lu Company purchased machinery costing 500,000. The machinery has an estimated residual value of 50,000 and an estimated life of 8 years. The asset is being depreciated using straight line basis, and at December 31, 2019, sorry for this. And at December 31, 2019, it became apparent that the machine suffered impairment in value. It was determined that the machine's recoverable value was 200,000 with the remaining life of 2 years and a residual value of 20,000. So prepare entries to record depreciation for 2019, impairment loss on December 31, 2019, and the depreciation expense for the year ended December 31, 2020. Okay, so first, the depreciation in 2019 before recording impairment. So before recording impairment, ensure that you have to update first the depreciation on the asset to arrive at its adjusted carrying value. Therefore, this is based on cost of 500,000 reduced by residual value of 50,000 over 8 years. So 500 minus 50 divided by 8 is 56,250. So that means therefore that the asset has been depreciated annually for 56,250 for years 2017, 2018, and 2019. So let us compute for impairment loss. So our carrying value is 500,000 minus the accumulated depreciation, which is 56,250 times 3 years. So that's 3. So deducting therefore this accumulated depreciation from 500,000, the carrying value of the asset is 331,250 before recording the impairment. And the asset's recoverable amount was determined only to be 200,000. So deduct 200,000. That means therefore that we are to increase the accumulated depreciation by 131,250. So our entry to record the depreciation is to debit depreciation expense 90,000, credit accumulated depreciation 90,000. Of course, this depreciation expense will be for years after December 31, 2019. So this is for year 2020 already. Okay, so the estimated useful life of the asset is 2 years after testing it for impairment. So it was really impaired because even the useful life of the asset has been shortened. Prior years is only 3. So that means based on original estimate, the remaining life should have been 5. However, because the asset is impaired, its useful life is also shortened by 2 years. So our depreciation for the next 2 years will be 90,000 to bring it to 20,000 at the end of this 2-year period. 20,000 is the residual value. Okay, we are now moving to recovery of impairment. So similar to recognition of impairment loss, there may be a case wherein such impairment loss previously recorded may be recovered by the entity. So if the previous indicators for impairment are no longer present, then it is already appropriate to recognize recovery. So let us proceed. Let us read first the information provided by 2-32. A building owned by Twin Head Corporation had suffered impairment in value, and an impairment loss of $2,400,000 was recognized by the company on December 31, 2017. After recognition of impairment, the ledger accounts of the Twin Head showed the following balances at December 31, 2017. We have 10 million and accumulated depreciation of 4,400,000, and 4,400,000 includes the 2,400,000. So previous to impairment, the accumulated depreciation is only 2 million. The building was originally estimated to have a useful life of 20 years when acquired on January 1, 2014. Now is 2017. So 14, 15, 16, 17. So that is after 4 years. Depreciation was computed using the straight line method. The company measures all buildings it owns using the cost model. The company had the intention of occupying the building for its remaining useful life of 16 years. So if this 16 years is the remaining based on original estimated life, that means that the original estimated life is 20 years. That is 16 plus 4 prior years. On December 31, 2019, there were objective evidence of recovery in the value of the building owing to the flourishing business in the area in which the building is located and increased marketability of Twin Heads products. The building had an estimated useful life of 14 years on this date. That is after 2 years from the date the impairment loss was recorded. The assets recoverable amount at December 31, 2019 was 7,500,000. We are to compute depreciation expense for 2018-2019. That is after recording impairment. Prepare any appropriate entry at December 31, 2019 as a result of the foregoing. And what is that? That is if there is recovery in the value of the asset. And what is the assets carrying amount after the recovery on December 31, 2019? Then how much should Twin Head recognize as depreciation expense for the year ended December 31, 2020? Okay, so what is our principle? Please take note of this principle. Please go back to this video repeatedly and please master the principles emphasized in this exercises solved. The principle is that recognizing the recovery of impairment shall not bring the carrying value of the asset beyond its carrying value had no impairment been previously recorded. So that means therefore that the amount of the recovery has a limit. Para din sa inventory, di ba? The amount that is recovered in the decline in NRV of your inventory also has a limit. Thus, the recovery shall be tested for that limit, which is computed as follows. The accumulated impairment loss recorded, and then we deduct the recovery from the date the impairment was recorded. The annual recovery is the excess of the annual depreciation before impairment and the annual depreciation after impairment. Therefore, in effect, by recording impairment loss and recording subsequent lower depreciation, this amount is your annual recovery of impairment. Meaning, unti-unting binabawi nyo yung ni-record nyo dito through lower depreciation. Then, this difference, which is the excess of depreciation without impairment over depreciation with impairment, is the annual recovery of impairment. So, this difference will be multiplied by number of years from date of impairment to the date of recovery. Therefore, this one is the recovered impairment. This is the total impairment. This is the recovered impairment. Subsequently, so ito yung original, ito yung na-recover nyo na through lower depreciation, therefore ito pa yung hindi nyo nare-recover. Therefore, yung hindi nyo nare-recover, yun yung limit on recovery nyo. Limit means you are to take the lower figure between the increase in the value of the asset and this limit. Or if you are using straight line depreciation, your unrecovered impairment loss, which is the limit on recovery, is computed as follows. We have impairment loss times remaining number of years from the date of recovery to end of remaining life from the date of impairment over total remaining years from the date of impairment. Again, this is remaining number of years from date of recovery up to end of useful life divided by the total. What is the total? Total remaining years for the asset from the date of impairment. Therefore, this amount is the limit on recovery. So, that limit in recovery is also this amount. So, bahala kayo kung anong gusto nyo gamitin. But again, this one is using a straight line. So, mas safe ito. Okay, so let us compute for 2018 and 2019. Again, we go back after recording impairment for the year ended December 31, 2017. Your accumulated depreciation is 4,400,000 such that your carrying value is 5,600,000. So, years after that, before recovery. So, in years 2018 and 2019, 5,600,000 will be depreciated over the remaining life of 16 years. So, 5,600,000 divided by 16 is 350,000. So, on December 31, 2019, actually, ginawa nyo itong entry nyo once in 2018 and another in 2019. So, in 2019, before recording the recovery, your entry is to debit depreciation expense as computed here, 350,000. Credit accumulated depreciation, 350,000. Then, let us compute for the adjusted carrying value after recording this 350,000. We have carrying value. So, your recoverable amount is this carrying value of 5,600,000. Saan galing to? This is the carrying value as given in the problem that is at December 31, 2017. But we recorded twice the revised annual depreciation once in 2018 and another in 2019. So 350 plus 350, that's 700,000. Therefore, your carrying value is 4,900,000, but the recoverable amount of the asset is 7,500,000. Therefore, the increase in the value of the asset is 2,600,000. Now, if this 2,600,000 will be covered by the limit on recovery, then you will be recording the full amount of 26. But if this 26 is not within the limit, then what you will record as recovery of impairment is only the limit. So how do we compute again? Your limit on recovery is the original impairment loss of 2,400,000, but your recovered impairment annually is 150,000. So the difference between your depreciation based on cost without impairment and your depreciation after impairment is 150,000. So 150,000 is to be multiplied by 2 years. Therefore, that's 300,000. Compute natin to. Sorry, we have, okay, so this is depreciation before impairment. That is cost of, we go back, 10 million over 20, which is what? 500,000. Whereas depreciation with impairment sorry, I am encoding in a table, is 350 as computed. Therefore, your annual recovery is 500 minus 350, which is 150. Hence this amount. So you have 150,000 times 2 years, that's 300,000. So out of total 2,400,000 impairment loss recorded in 2017, you have recovered in 2018 and 2019 a total of 300. So your limit on recovery is 2,100,000. Again, take note that the increase in the value of the asset is 26. But your limit on recovery is only 2,100,000. Therefore, the amount that will be recorded here as recovery of impairment is 2,100,000. So our entry is to debit. So baligtad na ang entry natin. We are now decreasing the accumulated depreciation of 2,100,000 and credit an income account, credit recovery of previous impairment, 2,100,000. Please take note that under IAS 36, recovery of previous impairment is a required disclosure. So it's presented as one of the note disclosure in the notes to financial statements. Therefore, after recording the recovery, what happens now to our asset values? Your cost is 10 million. Your accumulated depreciation at the end of 2017 after recording impairment is 4,400,000. You record depreciation expense of 350,000 during 2018 and 2019, so a total of 700,000. But your accumulated depreciation is reduced by the recovery recorded amounting to 2,100,000. So that is 3 million. So your carrying amount is 7 million. This carrying amount should not be higher than the carrying amount had no impairment been previously recorded. So to check, your limit on carrying value without impairment is 10 million. Ang remaining useful life natin based on original estimate at the date of recovery is 14 over 20. Therefore, that is 7 million. Again, 14 over 20 is the remaining life from the date of recovery. 20 is the revised life. Therefore, 10 million times 14 over 20 is 7 million. So, your carrying value should not exceed 7 million. Parang ganito lang yan. Parang napanaginipan nyo lang. Yung impairment, pagkatapos, inalis nyo yung impairment through recovery. So, in effect, dapat yung asset value nyo hindi na-interrupt ng pag-record nyo ng impairment. Kasi in effect, in-erase nyo rin yung impairment. So, the amount that has been erased should not exceed the unrecovered impairment loss. So, your depreciation expense for 2020 will now go back to normal. That is based on carrying amount of 7 million divided by remaining useful life of 14 years. So, that's 500,000. So, in effect, bumalik kayo sa normal situation na yung building nyo i-depreciate at 500,000 annually, which is the annual depreciation before recording impairment. Okay, so the last for this day, just a follow-up on recovery of impairment. On January 1, 2017, Coco Company acquired a factory equipment at a cost of 300,000. The equipment is being depreciated using the straight line method over its projected useful life of 10 years. On December 31, 2018, that is after using the asset for 2 years, a determination was made that the asset's recoverable amount was only 192,000. Then a year after that, on December 31, 2019, the asset's recoverable amount was determined to be 222,000 and management believes that the impairment loss previously recognized should be reversed. So letter A, how much impairment loss should be recognized on December 31, 2018? B, what is the asset's carrying value on December 31, 2019? And how much impairment recovery should be reported in 2019? So, it's almost a repeat of 2-32. It just enhances your understanding of the recovery of impairment. So, we compute. Again, compare the carrying value of the asset before impairment with its recoverable amount. So, your cost is 300,000. It's depreciated over a projected useful life of 10 years. So from January 1, 2017 to December 31, 2018 is 2 years. So 300,000 divided by 10 times 2 is 60,000. So the carrying amount at December 31, 2018 before recording impairment is 240. The recoverable amount is determined to be 192. Hence, an impairment loss of 48,000 will be recorded. So, after recording impairment, again, the asset's carrying value has been adjusted to its recoverable amount of 192. So, when we compute depreciation for 2019, the year after, your basis will now be 192,000. So let us compute for the carrying amount at December 31, 2019 before. This is before impairment, before recovery. So we have 192,000 minus the recorded depreciation for 2019, that's 192,000 divided by 8, which is the remaining life. So that's 24,000. So the carrying amount before recovery is 168,000. but it's not yet the final answer for letter B because the question here is what is the assets carrying value on December 31, 2019. So there is an indicator that the asset is recovered in value, has recovered in value. So let us proceed to letter C. We go back to letter B. Okay, so the carrying amount before recovery is 168,000. The new recoverable amount is 222,000. So the increase in value is 54,000. But we have to compute again the limit on recovery. So your previous impairment is 48,000. But recovered in 2019. So your annual depreciation before impairment is 30,000. That's 300,000 divided by 10. But your depreciation recognized in 2019 after impairment is 24. Therefore, in 2019, you recovered only 6,000. So 48 minus 6, this is the amount that has not yet been recovered. So this is your limit on recovery. Therefore, between this increase in value of 54 and this limit on recovery of 42, you are to choose the lower because the recovery nga is limited. Therefore, you are to take up 42,000. Hence, what will be your recovery? Your entry here. Lagyan natin na entry. Debit accumulated depreciation for 42,000 and credit recovery of impairment which is an income account for 42,000. Therefore, here let us add recognized recovery with limit of 42. Hence, what's the total? Your total is, this is your carrying value. Sorry. After recovery, and the one that will be presented in the statement of financial position is 210. So actually, where does the 210,000 come from? So check. So we check. So to check, because there is no more impairment as it has been reversed, I do not know why this is underlined. Your cost is 300,000. Your accumulated depreciation, no impairment, should have been 30,000 times 3. Therefore, it's 90,000, such that carrying value without impairment, so dito kayo dapat bumalik is 310,000. Okay. Wala rin. Ayaw. Okay, therefore we go back. No, that's not 310. It's 210. Okay, so we go back now to 210,000 as computed here. Okay, so that covers our discussion on depreciating leasehold improvements and then capitalizing replacement costs when appropriate, and recording impairment and recovery of impairment. I'll be answering your queries once we meet on Tuesday, or Ma'am Ireneo and Sir Alan will be answering your questions relating to these exercises soon. So for the meantime, I will stop sharing and I will stop recording. Bye for now. See you again.